Remember, tariffs are taxes on American consumers that raise prices on electronics, household goods, and other essentials, hitting families and small businesses hardest. They also provoke retaliation from trading partners threatening U.S. exports. Tariffs won't solve America's fiscal crisis, but it will likely make it worse because of less economic growth. Hello. Welcome to this week's economy. I'm your host, Dr. Vance Ginn. Thank you for joining me again today. It's always a pleasure to have you join me. Please share this podcast with your friends and family. They too need to know what's going on in the economy and other things that we talk about here each and every week. And don't miss my Let People Prosper show as well. The latest episode from last Thursday is with Jake Morabito from the American Legislative Exchange Council, where we talk a lot about AI policy and what it means for the future of getting into AI and everything else. You don't want to miss it. It's a great discussion. I've got another good one coming up on this Thursday. You don't want to miss that one either, about opportunity and a lot more. So don't miss that one as well. So let's go ahead and get right into what I have for you today. All right. So look, in the aftermath of the Charlie Kirk's assassination, many are asking what comes next, including me. Free speech feels under attack. Policy debates feel more heated than ever, but now is not the time to retreat. It's time to fight for truth. We need clarity about which policies work and which don't, and we must pursue those that let people prosper through principles over politics. Part of that fight is advancing pro-growth policies that get government out of the way. The latest economic data paint a troubling picture. Inflation is running hot, the national debt is soaring, the labor market is weakening, and a third of the United States states are slipping into a recession. Now, more than ever, we need policies that can steady the ship and put America back on the path to prosperity. So, in this week's episode of This Week's Economy, I'm going to break down what all these data mean and what solutions can move us forward. So let's get to it, all right? Number one, Kirk and the future of free speech. In the news, conservative activist and Turning Point USA leader Charlie Kirk was shot last week, actually 2 weeks ago, while hosting a debate on a college campus in Utah. The suspect is now in custody, and Charlie's wife, Erica, has pledged to carry forward his work and was recently named chair and CEO of Turning Point USA after Charlie's death. My take on this is, like many, I was stunned by the tragic murder of Charlie Kirk. I didn't know him personally, though I shared the stage at events where we spoke. While I didn't always agree with his style or even his stance, I respected his courage to show up, debate openly on college campuses, and share his faith in Jesus Christ. In today's world, that takes real conviction, something that I'm hoping to do more of in my work. And I will say that was September 10th, whenever the shot happened, and it really shook me up, as it may have for many of you. I probably shouldn't have watched the videos. I mean, I shouldn't have, especially the close-up view of him being shot. That really kind of just keeps going on in my head over and over again. And as someone who gives speeches and is in the public pretty often and enjoy these types of debates, it wasn't vitriolic or anything like that, just back and forth banter. It concerns me that that's the direction of where some people are across America. I do think it's a little bit much that people are blaming this on political things, whether it's the left or in the right in other cases, when oftentimes these are the events of a madman, the decision of madmen and women, I guess, right? It's not necessarily a political left versus right. This person who shot Charlie Kirk was one person. Maybe there was someone else backing him, but his actions, his purposeful actions were what made this happen. And so I hope that we don't get too tied up in the political back and forth, because that could lead to worse problems overall. Free speech is what helps make America the greatest country in the world. This tragedy is the sobering reminder of the risk many friends take when they speak out on public policy. None of us should have to fear or live in fear for defending our beliefs. The best way to honor Charlie is not through division, but by keeping the battle of ideas civil, courageous, and grounded in truth. This tragic event cannot silence truth. We must keep speaking with faith and courage in today's polarized world. Sometimes simply showing up is an act of resistance, As for me, I will continue to stand on the truth that pro-growth policies let people prosper. I discussed more of this in my initial reflections on this horrific event in the most recent edition of Prosperity Pulse called The Power of Courage and Conviction. That's Prosperity Pulse number 23. I put those out once a month to kind of give you an overview about all the work that I'm doing and what I'm seeing across the country that you can also find at vanceginn.substack.com. Number 2, the national debt soars. In the news, the Congressional Budget Office's August budget update shows the federal deficit at $1.989 trillion, up $92 billion compared with the first 11 months of fiscal year 2024. Federal spending rose $391 billion from a year earlier, a 5% increase. Meanwhile, President Trump has claimed tariff revenues could pay down America's $37 trillion debt and even fund a public dividend. But Treasury data show these revenues don't even cover 1 month of interest cost. So this is a pipe dream. My take is that America's federal budget has ballooned from $4.5 trillion in FY 2019 to a projected $7 trillion in FY 2025 and 2026 above that. This is a 56% increase in just 6 years, much of it locked into permanent baselines. This isn't sound fiscal policy, it's economic malpractice. Remember, tariffs are taxes on American consumers that raise prices on electronics, household goods, and other essentials, hitting families and small businesses hardest. They also provoke retaliation from trading partners threatening U.S. exports. Tariffs won't solve America's fiscal crisis, but it will likely make it worse because of less economic growth. The solution is to roll back spending to FY 2019 levels, cap any future growth of spending to population growth plus inflation, and cut wasteful subsidies and programs. Collectively, these could save $2.5 trillion per year. Taxes, whether cuts or hikes, are only one part of the equation. Spending restraint paves the path to restoring fiscal responsibility. Related to this, I discuss these solutions and debunk myths on our national debt at the Daily Economy that you can also find in the show notes. Number 3, the economic situation. In the news, the Bureau of Labor Statistics annual benchmark revision erased 911,000 jobs from March 2024 to March 2025, a 0.6% drop in employment and one of the steepest downward corrections in decades. In other words, nearly 1 million jobs we thought existed never did. August jobs report added to the weakness. Payroll jobs grew by just 22,000, while unemployment rose to 4.3%, the highest since 2021. Today, there are millions of people are unemployed for a long time. In fact, 7.4 million Americans are unemployed, with long-term joblessness up 385,000 just over the past year. Meanwhile, labor force participation has slipped to 62.3%, the employment to population ratio dropped to 59.6%, and core CPI inflation remains elevated at 3.1% year over year. My take on all this is that the jobs report is telling us that this was not a win for working Americans. It was a warning. Unemployment is the highest in years. Nearly 1 million jobs have been erased from the record books, and the only growth Washington touts comes from expanding tax-funded bureaucracy in healthcare, raising costs, and in lengthening wait times for patients. The real fix here is that we don't need to revive a weak labor market by printing more money, which causes inflation. We do it by restraining government spending, ending distorted policies like tariffs, and freeing entrepreneurs and workers to create value. Instead of celebrating bureaucratic payrolls, Washington should cut red tape, unleash providers, and empower families and patients. Prosperity doesn't come from accounting gimmicks or the Fed's printing press. It comes from freedom, lower spending, fewer bureaucrats, more providers, and patients in control. That's the kind of growth worth celebrating. Related to this, I dive deeper into the August jobs report and the pro-growth policies that can turn things around in my recent piece at Substack called America's Jobs Mirage: Weak Growth, Fewer Workers, and the Wrong Kind of Healthcare Hiring. Number 4, what's going on at the Federal Reserve? Well, in the news, last week, the Federal Reserve cut its target interest rates by 25 basis points and released economic projections that suggested 2 further rate cuts in 2025. In other news, last week for the FOMC, a D.C. appeals court upheld a lower court ruling blocking President Trump from removing Fed Governor Lisa Cook, who is statutorily protected from dismissal except for cause. Meanwhile, in a razor-thin 48-47 vote, the Senate confirmed Stephen Moran last week to the Federal Reserve's Board of Governors, where he will serve out at least the remainder of Adriana Kugler's term ending in January 2026. He's also going to stay at the Council of Economic Advisors. Maybe that has a conflict of interest. I'll let you decide. Moran is a possibly short-term but potentially influential voice at the Fed. So look, my take on this is that inflation is still way too hot at 3% year over year, well above the Fed's 2% average rate of inflation target. My concern is that this 0.25% rate cut to the range of 4 to 4.25% could reignite inflationary pressures. The real target should be substantially reducing its bloated $6.6 trillion balance sheet, which will help remove market distortions caused by the Fed's actions and let people in the market solely determine the price of credit. These two fights on the Fed leaders resulted in two outcomes, but both tell the same story. The Fed is drowning in politics. Moran's confirmation and Cook's court-protected tenure don't save or doom the economy. They just highlight the absurdity of centralizing control of money in Washington. If 12 people on the FOMC shouldn't set interest rates, then neither should one. Not the Fed chair, not the president, not a judge. The key isn't finding the quote-unquote right central banker. It's admitting that no central banker has the knowledge or the incentive to do what millions of borrowers, lenders, and investors already do every day: discover prices through voluntary exchange. That's why the Fed and the president should step back unless it is to get government out of the way. Markets know better. Related to this, check out my interview on NTD News, where I discuss the Fed's decision to cut interest rates and a lot more. Number 5, biotech at risk. Will America lead or lag? In the news, America's biotech leadership is slipping as China closes the gap, on track to surpass the United States in clinical trial share by 2027. Already graduating 50% more advanced STEM students each year and gaining ground in novel drug output and R&D investment. Most favored nation drug pricing and Inflation Reduction Act mandates could cut new drug development in half and drive private investment overseas. This is a recent report that I did by the Americans for Tax Reform, which you can find in the show notes page as well. My take on this is that biotechnology or biopharmaceutical isn't just another industry. It's about whether the next generation of cures for cancer, Alzheimer's, and rare diseases are discovered here or Beijing, or perhaps not at all. It's about whether American patients access breakthrough treatments first or are forced to wait in government-imposed lines. Washington already directs about 60% of U.S. healthcare spending. That's not a free market. That's government control. When government dominates, price signals vanish, competition collapses, and costs rise. That's not a failure of markets. It's a failure of government. While America strangles innovation, China charges ahead with its Made in China 2025 strategy. Beijing doesn't need to out-innovate us. It just needs Washington to keep kneecapping our own innovators. America didn't become the global biotech leader through central planning. We got here when government stepped back and let markets work. If Washington doubles down on control, China will gladly take our place. But if we trust freedom, which we should, America can remain the global leader in cures and innovation. You can check out my new report at Americans for Tax Reform, where I recently spoke up at the Capitol as well. And the next one here is slowing state economies. In the news, with new data out from Moody's Analytics, the chief economist Mark Zandi is warning of growing recession risks. States representing nearly a third of U.S. GDP are already in recession or close to it. Another third are barely holding steady, while only the final third continue to expand. So we've got some major problems going on across the country. My take of this is that 1/3 of U.S. states may be in a recession already. The labor market is a lagging indicator of a recession, so we could soon see further signs of these recessions. Meanwhile, stagflation is back from poor policies in D.C. and even in many states. The path forward is to pair growth with spending discipline. By contrast, California and New York rely on bloated government and high taxes, pushing residents out. States must decide either to continue to lead into their strength or let government bloat undermine them. And if lawmakers want their states to be a beacon of prosperity. They must rein in government spending and double down on the free market principles. These policies include eliminating property taxes, imposing spending limits, and supporting families through freedom. Less government, okay? Related to this is after reviewing the July jobs report numbers, I wrote a list of policies Texas must pursue to create lasting prosperity. Other states should do the same. That's what I have for you today. Thanks for joining me in this episode of This Week's Economy. For more insights from me, visit vanceginn.com and get even greater value with a paid subscription to my Substack newsletter at vanceginn.substack.com. Thank you for joining me. Share this with your friends and families. God bless you. And until next time, let people prosper.